So first, you need to employ a strategy like this right now if you're looking to buy a house. Interest rates aren't coming down this year. I was wrong last year when I predicted that they would come back down by the middle of this year. The economy is surprisingly resilient, and even though we have near 8% interest rates, the jobs market is still doing well, and they need all that stuff to kind of go down a little bit before interest rates come back down. So I think we're looking at interest rates staying the same, maybe even going up a little bit the rest of this year. So if you don't want a 7.5% interest rate and you want to get into the fives, you need to think about a strategy like the 2-1 buy down. The 2-1 buy down is basically where hopefully we get the seller to pay for a chunk of your closing costs, and instead of asking them for a price reduction when you make an offer, and we use that money that they're paying to temporarily buy down your interest rate by a big chunk, 2% for the first year. So if you were going to have a 7.125 rate, now you got a 5.125 rate for the first year, and your payment is significantly lower, allowing you to be comfortable moving into your new house. At the end of year 1, it's going to go up 1% to 6.125, and at the end of year 2, it's going to go up to 7.125%. But what we're betting on, what we're hoping for, and what we're strategically planning for is that sometime within those 24 months, you are going to refinance into a permanent mortgage because interest rates came back down into the fives, and you could lock that in forever, right? For your whole 30-year mortgage. So there is risk in this that if interest rates don't come back down ever, right, then you're stuck at the 7.125 rate. But by then, you probably make a little bit more money. You've gotten some raises. You've probably paid off some debt. You built up some equity in your house. You know, all of these things, a lot can change in 24 months. So it's a very strong strategy if you're able to qualify for a mortgage right now, a high, loan amount, but you're just kind of worried about the payment. This gets you a lower payment for the first 2 years and gives you the ability to refinance to make that lower payment permanent after you refinance.